Hello and welcome to today's video. In this monthly update we'll be looking back how my stocks and shares ISA performed over the previous month of August. I recently made a video showing how much income I've received from my premium bonds. I'll leave a link to that in case you missed it, but in that video I said I was thinking of showing my monthly income from that as well, so this will be the first month of combining that with my portfolio update. That'll be at the end of this video though, so if you want to see how much that's made me, then stick around for that. I made a lot of changes to my portfolio in August, so much so that it's actually been a struggle knowing where to begin with this episode. I normally start by looking at major events that are shaping the markets, but I think we all know how things are looking at the minute. I'll try and go a bit more in depth on this topic soon though. So I'll start with income today, as that's always a good thing to see. I got a dividend payment of just over £6 from my Eden Tree fund, which takes my total for this financial year to just over £32 and keeps my monthly average income just above the £6 mark. I'm due a dividend in September from LGEN, which will boost that monthly average even higher. I'll take a close look at that in a bit. Last month saw my loyalty bonus slashed as the fund that's my majority holdings stopped paying them. I did however reach the £10 needed to reach the minimum reinvestment threshold, so that was paid into the fund of my choosing this month. This change though will make a big impact on reaching that £10 in the future. I had gotten the time it takes to reach that amount down to around the 10-month mark, and with that £10 being reinvested into funds and my plan to consolidate some of my other poor performing funds into loyalty bonus paying ones, I would have soon been reaching that £10 every month. As it currently stands then, my monthly income from this payment is now down to around the 40p mark, and this month I had 2 payments from Eden Tree, so it's down roughly 2/3 from a couple of months back. Not ideal. It's worth mentioning though that I wouldn't pay money into funds just because they pay a loyalty bonus payment. There's no point in getting 10p back a month if you're losing £50 a month in a poor performing fund, so make sure you do your research, and as always, don't invest what you aren't prepared to lose. Moving on to all of my holdings now, regular viewers will see quite a bit of change. This is how it looked last month for any new viewers. I know this month doesn't look great on the surface, but when I start digging into it, it's actually not that bad. I'll get into that shortly. I mentioned earlier that my biggest fund holding was no longer paying a loyalty bonus payment. That fund used to be called the Fidelity Global Focus. Fidelity have merged 2 of their global funds, and now the funds go by the name of Fidelity Sustainable Global Equity. Now my loyalty bonus was already set to go to the Fidelity Global Focus fund, but instead that's been paid into this new merged fund. I decided to keep it this way, as even though it no longer seems to pay a loyalty bonus, it is performing well, and the key sectors it's invested in haven't changed. Remember earlier when I said about performance being better than a bonus? Another change I made in August is that I finally got rid of the LGEN Global Equity Fund. It was something I've been wanting to shift for a little while now, and it finally got out of the red, so I gave that sell button one massive slap. At the same time I decided to also ditch the Peerford Global Total Return Fund. I mentioned last month that it just didn't make sense anymore. When I bought it I was just planning on buying funds and holding them for some time, but as I've been switching lately to shares and now interest rates are rising, it just didn't make sense for me to hold something that made such little in the way of returns. Selling off those 2 funds freed up just shy of £450. Now this is where I made a slight boo-boo, as the thumbnail for this video suggests. I'd seen the ex-dividend date for LGEN, a company that I already owned shares in was going ex-dividend on the 18th of August. So, perfect I thought. I could put all that newly freed up cash into LGEN, as it still seems to be a bargain to me and still fits my needs. So I woke up on the morning of the 16th, mornings still aren't my best time, hit that deal button to buy as many shares as I could, and then went back to the home page to see I had about £950 in cash sitting in my account. Yeah, turns out I didn't hit buy, I hit sell. Not my best moment, but unfortunately that's not even close to the worst mistake I've made this month. Brain fog is not fun. Life isn't about your mistakes though, it's about how you learn from your mistakes. That's what my parents always said about me anyway. So as always, the share price has nosedived after going its dividend, which is fairly normal. I'm not phased and I may actually top up my holding now they're even cheaper. With that latest purchase though, I now hold 382 units of LGEN, which will net me just over £20 in dividends in September. Going back to my portfolio, LGEN alone are down around the £150 mark. I have no worries that the share price will rise in the future, so if I exclude them from my portfolio, it's actually performed pretty well this month. In my last managing my portfolio video, I changed my instructions so that Centrica and Royce were both topped up £25 each month. I cancelled the Centrica instruction this month. The share price for Centrica has dropped nearly 10p in the last month, and now with such uncertainty around energy supplies in the UK, especially with the new Prime Minister taking office, I thought it best to wait this one out. I may reinstate the payment once we have a new Supreme Leader and a new plan is in place. Rolls-Royce have performed very similarly to Centrica in the last month, and with the current economic climate, I can't see it improving anytime soon. They're facing increasing costs due to the cost of their materials rising. They already implemented a bonus payment to staff along with a pay rise to help with the cost of living crisis, but the union is still pushing for more. This is great for the workers and one of the reasons why I chose to invest, but they already have substantial debt, and with costs rising, this will take even longer to clear. I will keep the shares I own as they are a long-term investment, but I don't think I will add any more for a while unless things change. My emerging markets fund from JP Morgan has finally seen some uplift in August. With China's economy weakening, I think this could take a hit again in September. I've been wanting to shift this fund for a while now, but I feel now isn't the time for me. I'll run through the rest of the funds I haven't looked at in depth now quickly before I get onto my premium bonds. Let me know below though how you're feeling currently about the markets. What are you lot buying up or selling off? Also, if you hold premium bonds, then it'd be good to hear what you won this month. So, onto premium bonds. If you've not seen my latest video where I run through how much I've won so far this year, then check it out. Just to get you up to speed, I've held the full allocation of £50,000 in premium bonds since the start of 2022. I hope you're sitting down for this one. In the September draw, I got the grand total of £25. So the lowest prize you can win. That gives an equivalent interest rate of 0.6%, so well below the current market best. It's still better than nothing though, so I'm not too upset. That's it for today. Don't forget to leave a like and subscribe for future content. Stay safe out there. Peace.